Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge. We'll get going here in just a minute. Okay, that's fine. All right. All right, everybody. I'm Dan Hussey with Zaner Ag Hedge, bringing you the strategy of the day update here for April 18th, 2023. Today could have been seen, maybe as a bit of a trend reversal. Could have been turned around Tuesday. I don't know. I don't necessarily think so. But markets, will, I think, prove us here into tomorrow with something, more to be said. Let's start with taking a look here at our row crops, which is where our focus of today's video will be. I felt corn, wheat, and beans. There's something worth to be said here with this chart of May corn. Breaking through this downward sloping trendline resistance, breaking out now in the last couple days here since our last strategy of the week update above those cluster moving averages. That 18-day moving average now getting dragged up here to the 654 area, crossing back above that 55-day moving average. So we got a little bit of a bullish crossover. That's a good thing to see there. So that golden cross now wouldn't be surprised to see a bit of a pullback because we are overbought in the daily stochastic, and we have run up into the 690 area that is the proven resistance. 685 to 690, whatever, proven resistance since January. The bigger band of resistance goes back through September up towards the $7 figure. So I think we'll have some resistance to chew through. Look, last time we came on up here, a bit of an up and down price action while we tested it the first time. I think we'll see similar price action, right? Kind of this up and down, up and down, up and down as it then eventually breaks out. But we could test all the way back down before going higher too. We'll see what happens, right? But there's a trend line above us on the now below us, but the market is broken back above, pulling back to test the support into the 660 area isn't out of the question here. 18-day moving average again is down around 654, so it's way below us there now, 20 cents. But I am confident, to some extent. I think May corn might be heading higher here. Let's take a look at that 4-hour chart for May corn. Trading out the day here at 676 and a half to close the day, right? We were generally higher and making pressing into new highs for the month of April here at 682 and a half highs of the day. We pulled all the way back to 670. Gosh, I wanted to be a buyer maybe at 670, but the way we bounced and kind of closed, and when we take a look at beans here in a second, and wheat, you'll see what I mean. There was just kind of a lack of follow through, and settling kind of back into yesterday's range. I did not like that. Right, yesterday's range rose from 662 and closing yesterday's high with a high of 677. We saw strength in the overnight, but then sold off in this day's session. I'm fearful that we'll see another round of selling pressure, and if that's the case, I'm eyeing this 50% retracement. That's from the 640 swing low to the 682 high. This market has already taken 2 steps forward, 1 step back, okay, into the 637 50% support. There's an upward sloping trend line there. The market then rallied and is now headed and hit its technically its negative 23.6% target up there at 683. So next in the series would be from entry lows, right, the 640 area to new highs. This old fib is kind of removed from the chart. Certainly don't care. Well, I mean, we do care about those levels, but like there's other levels to look at before we get there, and would consider those again. And they're kind of already proven, right? And they gave us one piece of the puzzle, right? When you're tracking prey, you don't go back and look where the last several footsteps were, right? Unless you're trying to figure out where the next footstep is. But then if you get a new footstep, right, 2 steps forward, you don't go back and start looking at these footsteps, right? Anyway, 2 steps forward, 1 step back. 2 steps forward now, 1 step back could take you to the 660 area. That would be a test of the trend line against the highs that we broke as support. There's also an upward sloping trend line that comes in around that area. And again, that would be kind of a pullback towards that 18-day moving average. While the 18-day moving average will probably come up towards 660 into tomorrow. I wonder if a pullback occurs. Anyway, something I'm eyeing here in the near term. So let's take a look at that May soybean now. Daily chart here going out today around 1519. Give it a second here to load. Not interested in waiting. Maybe I'm having some internet issues here. I hope. Well, let's just try reloading. Well, either way. Okay, there we go. Wow. I haven't had issues like this with my machine in a while. Actually, with this machine ever. Whoops. Of course, email me at dhussey@zaner.com if you have any questions, comments, or want to learn more about what we do over here at Zaner. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today, is my own opinion and not a direct trade recommendation. Hey, perfect timing to fit all that in there. Okay. While we're waiting for that December corn or May beans chart to come up, you're going to see how in a minute here we folded kind of back into. Oh wow, that's hysterical. It actually came up with the other chart. We folded back into yesterday's just about into yesterday's range, but the pullback after making new highs here towards 1531 was right back into this downward sloping trend line against the highs now as support. 18-day moving average down below us at 1488, 55-day here at 1503, 100-day at 1496, and 200-day down there at 1457. We capitulated. We broke below that 1480 area. That was the supportive price band. We went down. It just sunk. I mean, it proved to us there's nothing here back in the range all the way down to our other supportive area around 1400. It's actually kind of an upward sloping trend line there that came in, I guess, and has not proven itself. So, right, we're going to respect that level going forward if it ever comes down to it. We'll talk about it, right? But we capitulated below, and then we've rallied right back up above 1480 really quickly, and then all the way back up towards the old 1540 resistance again. Pulled back here, but couldn't get below the 18-day moving average. Basically, just went below the 100-day and 55-day moving averages for a moment, and have clambered back above basically the downward sloping trend line against the highs here. We only have a resistance price band, from the 1540 area to the old contract highs of 1564 now above us. Support still at the 1480 area. I think below 1480, market's proven to us how far down it can go and the damage you can do to the bean chart. So, yeah, but while above, it feels like we need to, at least in my opinion, short squeeze higher a little bit. We'll see if that comes to fruition. Overbought here in the daily stochastic, but just kind of going into that. I think it's going to be a little bit of choppy, sideways, slightly up price action here in the near term. That's going to take some time to chew through some of that resistance. On the 4-hour chart, then we'll get into wheat right after this, but on the 4-hour chart for May beans, pull back to 1511 on the day, right? Still left us with a day that was higher highs and higher lows compared to yesterday and a 3-day uptrend still. Inside that uptrend, right, a little bit of a 50% pullback from the low at 1482 now to the new high would be at 1507. So pull back to 1507 to 1500. It's just a down, a test of the upward sloping trend line here at the 50% area. It would be an area that, from there, I would expect us to go to potentially 1560, but certainly back up to highs towards 1540 in the near term. Back below 1500, though, do we open the door to a full 50% long, right? Because we just kind of have one leg down, choppy 3 waves up, and then do we get one bit more big leg down towards 1466, a larger 50% area? It's that 1480, retest that 1480 area. Do we capitulate one more time, kind of do a fake breakdown before coming all the way back up? And believe you me, if we go all the way down there, I think a dollar rally coming after that is probably in the works, but we'd have to hold there, and I wouldn't be catching a falling knife. have to do something else here in the meantime. But I think in the meantime, we got support here at 1507 to 1500 that, yeah, okay, I think could potentially trade here in the next day or so. And I think it's worth looking at, it with a stop at 1490 or something here, 1480, while above, or maybe we don't risk that much. But anyway, if we were to come down there, that's where I'd be maybe buying a call above the highs. Below that area, again, I think we open the door lower. So, if you can afford to own a put and get protection here, it's worthwhile. I was looking at with clients today, actually out in New Crop. This was an interesting one. In New Crop, I guess I'll flip over to that real quick. It's kind of like hey, here's a little food for thought into how Dan looks at the markets. We're going to look at new crop corn here for just a second. I know we're flipping over. December corn trading at 571 here into the end of the day. I was looking at buying a 540 put here today. We're spending 27 cents on that. So we're getting a floor in here basically below, right, this big floor that if we break down, I think that's a good place to have and lock in a floor at this time in December corn. We were buying that 544 for 17 or 27 cents, and then we were selling $7, okay, $7 calls for about 9 cents. So cutting that cost down to 17 to 18 cents to own a 1540 put and get a floor in here. With upside all the way to $7, right? That's a long ways off. Do we think we can get there? It's to 7, perhaps, but there's ways you can work with a futures broker like myself who understands that type of trading strategy and how to mitigate that risk as time goes into its expiration. So, okay, we'll see what happens. Today, May wheat struggled here, trying to break above $7. It couldn't quite do it, but I think it's gonna continue higher through a few days here of higher highs and higher lows, breaking back above that 18 moving average, breaking back above the downward sloping trend lines. Okay, here we go. Wheat, I think up to 720 is the next area. We break through that area of resistance, not much in the way to $8, and back above $8. Well, the market then opens, I think, in a real way all the way up to 950. I don't think that's out of the question. But I think a lot has to happen here for wheat because boy, did it get battered down. I think now, though, we have a major short that needs to unwind, and these overbought conditions are not really overbought. It's very much just lots of buying in the face of oversold conditions. KC wheat here went out the day at 881. We'll go over these in a lot more detail here into the strategy of the week, but I'm expecting Chicago wheat there to push into that cluster 55-day and 800-day moving average here. KC wheat, the most bullish in my opinion of the three. Downward sloping trend line right here, this yellow line that we broke above, came back and tested into the 840 area. It was basically a 50% retracement that has an upside target towards 940. Right, it was a cluster of the 100-day and 55-day moving average here at around 850. And the 18-day moving average, which we basically came back down and tested at 866, we're now back above. We went up to test the 200-day moving average again. We talked about how this was a fight between the 200-day and 100-day. That's what it's been. Now, if we break above $9, I think that really accelerates and opens the door for KC wheat all the way up to about 1020. Is where I'd see the next kind of resistance or inflection zone that's proven itself in the chart. And above there, of course, we're talking much higher. But I think to get to these levels, you need some kind of other headline scare. To get to these levels, I think just the market just needs to unwind the short that's built up into it. And I think we're starting to see that. Last but not least, in an oldie but goodie, spring wheat here in the May contract went out the day at 885.5, down 3.5 cents. Kind of weird to see spring wheat behaving the way it is, getting KC wheat that for that matter. But I think when you look at the price of KC wheat and spring wheat right up in the 880s compared to the sub $7 Chicago wheat, you can see that they just didn't sell off like the Chicago did, and they capitulated below some figures like spring wheat here coming below 9, but boy, we're trying to break back above that area, and that 100-day moving average right now at 894. We get above that today. I think that's the trend line in the area to break out that opens the door to the 200-day at 920. And again, up all the way up to 1037, the 1020 area, some of the KC wheat. We're going to see the KC and the spring wheat, in pretty much lockstep because there's similar conditions and problems going on, with spring wheat being under snow and much of the northern plains, and then, Kansas being just this tale of like drought versus the eastern and western belts there. It's just remarkable how different, crop can be across one state. So We'll see what happens. Another little freebie here before I get going, and do join me every Thursday at 1:30 p.m. Central. Look in the comments section and the information section of this video to sign up for that Strategy of the Week webinar, where I go over these markets and a lot more in detail. The full market spectrum. This is that wheat corn spread that, historically usually averages at about $1.37. Although if you're like, let's just call this 200-day moving average, it's 30-year average. It's like at $1.30, $1.40. We traded all the way down to 7 cents, 8 cents over. It's at 20 cents over. So I think that this is about to unwind. I think buying wheat, selling corn as a spread here in the May and even into July. I'm going to look at that here on the Strategy of the Week webinar. For a move back towards $1 to $1.30 over is probably in the works, but that's something that we need to be mindful of. But usually where's that premium wheat should be carrying to corn? It almost was completely gone there earlier this week and last week, which is pretty remarkable. That's a 30-year tightening of that spread. Let's take something not to ignore. So all that being said, have a great evening, everybody. Thank you for joining me for today's Strategy of the Day webinar. You can find me here on Facebook at Dan SOTD or on Twitter at Dan Hussey Jr. Shoot me an email, dhussey@zaner.com. And of course, you can always give me a call at 312-277-0110. That's 312-277-0110. Have a great day, everybody. Leave your likes and your comments in the sections below. Have a great day, everybody, and we'll be back with you as price action develops. Take care, everyone.